Hey traders, what's going on? Jamie Saettele here with the midweek strategy webinar with SB Trade Desk. It is a couple seconds to noon in Central Time, US, and 1 p.m. on the East Coast. And let's get started here. Here's the beige book coming out. Sometimes it's a market mover, sometimes it's not. Not a whole lot going on right here. So I'm not even going to go through the stuff that comes out. You can find it, I'm sure, anywhere on Twitter. The you know the real-time news feed at Daily FX will have it. For us, we're going to look at charts, right? All right, so let's start. I've got 5 main themes that I'm going to go through today, and then we'll go through questions, of course. So the first one, we're just going to look at the buck in general, right? The US dollar and some of the majors that go along with that. In particular, the 4 components of the US dollar index, the FXCM US dollar index, which is pound, euro, Aussie, and yen. Yes, I will look at yen as much as I don't want to, because it is, as Mike would say, he's got a name for it. He calls it the abortion, but whatever. It's lulled everyone to sleep. I'm going to give you a stat on Japanese yen, which you're going to just blow your mind, actually. So that'll be fun. Then we're going to look at can't even read my own handwriting. We'll look at Kiwi in particular. Then we'll look at the Europe first commodity pairs, Euro Pound against Aussie Kiwi CAD. And then Euro Pound itself is actually kind of interesting. And then finally, we haven't looked at these in a long time in this, in SB. But we're going to look at dollar MEX, dollar South African Rand, and dollar Turkish Lira. Okay, so after that, we'll take questions. So kind of a lot to go through, but let's get started. We'll start with the US dollar. Okay, so I posted this chart over the weekend, and if we go back some here, the weekly chart. Okay, so here's the weekly chart, and what we've got, we've got this sharp decline, obviously from the highs back in April, and we actually have held below them. Right, so the dollar's been in this range, for 6-something months here. And a lot of people, mistakenly, they see a sideways range after a big run up like this, and they just assume that the market has to go higher, right? Because you're taught in textbooks that a market tends to resolve itself from a range in the direction of the larger trend, right? But look, in reality, the market's going to do whatever it damn pleases. Okay, and if that, we can have triangle tops too, right? What cracks me up is that your diehard Elliotticians will have this as a triangle, bullish triangle, and then they'll say, well, the market has to go higher, and then when it breaks lower, they'll have a new label and say that the market was A and it was triangle B, and then it went lower, whatever. Okay, point is, be flexible. Don't get married to one direction, one side or the other. It's okay to change your mind. Okay, you'd rather make money than be right. And the good thing about our method of analysis, if you will, is that we have pretty clear-cut levels that kind of rule our trading, if you will, right? So it's pretty simple at this point. I mean, this is the slope line here, the sliding parallel, and this is a weekly chart, right? So the sliding parallel here, it's pretty clear, right? We get below there, good night. Okay, the dollar is finally going to be in for one, big move. Okay, lower. So here's the daily, and it's the same levels, same line. got the sliding parallel. We can throw the 200-day average on there as well, if you wish, or you can just pull it up on a different chart. Let's see here, indicators. This is always preferable, I think, just to look at it this way. All right, so here's the US dollar index, right? 200-day average. 200-day, 200-day, 200-day. So, they're really trying to make its first close below it, actually, on a daily basis in a long time. It goes back to August of 2014, so it's been over a year. Obviously, you can trade around it for a while, but it's something to know that, we're on the verge of this potentially big, huge shift. So that's the buck, okay? So let's look at the different components. The takeaway here in the US dollar, okay, is that it's coming into this level that it's the 200-day average. We're below it at the moment. By the end of the day, we could be below it, we could be above it, we could be at it, I don't really know. But there's still support here, so you could still get a bounce. All right, I think that the big move is probably lower, okay, and that we're going to be having a massive drop in the coming months, okay. We have uptrend supports that are significant, but that are at much lower levels. So we'll be looking lower in the coming months. But again, remember, as a trader, and I stress this a lot, but you either got to trade a pattern, or you got to get bearish and sell bounces, or be bullish and buy dips. So in this case, what we're looking for is either if you get a breakdown here, then you'd look for a retest and sell resistance, old support becoming resistance. Or if we meander sideways for a little bit and find resistance somewhere else up here, you might get a chance to go short. Okay, but shorting here is pretty dangerous because you do leave yourself a lot of risk. Because at the end of the day, you still are quite simply in some sort of a range. So I think that the individual dollar pairs will actually clarify this point. So here's euro. This is the chart from the is published over the weekend, right? So here's euro daily, and came into the week looking to buy euro in any weakness. Really haven't had any, right? This was Monday, this was Tuesday, yesterday, and today we're making this move on resistance, actually. So you do have resistance or a level that you would expect to see something happen at 1465.75. And just to review what 1465.75 is the high from May, okay, along with the 61.8 of the move down from the August 24 high. All right, so euro is getting up into this level. Something that I think is interesting to note too, because there's obviously a lot of people out there talking about the buck on the short side at this point. As well, I think they should from a bigger picture standpoint, but from a short term timing standpoint, just be careful because we have had gold obviously break out to the upside here. Here's the August 24th high. Okay, and gold has broken out, and there is bullish slope now. But the euro is still below this high. So you do have somewhat of a non-confirmation there, between these markets. And gold itself is actually going to come into resistance on the weekly chart a little higher, starting at like 1187 or so. We're currently 11, what's today's high? Today's high is 1179, so it's really not very far. And then you've got the the high up here from June at 1206. So gold's broken out, but again, you want to be a buyer on the breakout or a buyer on supports, in my opinion. All right, so that's euro slash gold. So with euro, what we'd be looking at here, you know, I'm not saying to sell 1465.75. Okay, that if you do, you know, be nimble, be really short term about it, and be careful. What I am saying is this is a level to expect some sort of a consolidation. Okay, if not an outright just pull back. All right, you might not end up getting back towards, you know, the 1280 area. It'd be a pretty big move lower from there, but you know, keep an open mind, I guess. Um, but you know, we would be looking for, you know, maybe sideways consolidation that takes us down into the lower parallel at some point in the future. All right. So again, with the U.S. dollar index approaching its long-term slope support, looking at euro, it's coming into its own uptrend resistance, if you will. Okay. Pound dollar, this one's been pretty good looking, right? Came into 152 yesterday. We would have been buying this at 151.70, which was the sliding parallel, of course. We got long down here, remember, and we're out at 53.20, and then got the dip to get long again, but it didn't get us to where we wanted to get long. In any case, we're actually now, pound is, again, this one is actually even a little more urgent, okay? Pound dollar is sitting here testing, this is a high volume level right now, okay? In fact, this 61.8, I'm just gonna get rid of the fibs, kind of like all over the place with this stuff. I wanna highlight the big, big, big levels. All right, so this, you see this day right here, okay? That was 826. That was a high volume level. I can bring that up in a different platform here for you. Let's see. Volume. Okay, so here you can see it pretty clearly. All right. So here's the volume level. You can see here 826 was a big breakdown day. And if I just put a horizontal line on this bad boy, you can see that was the most volume that we had since near the top, actually, in May. And this was the election volume. So a lot of volume. So this is a pretty big spot. Mark's asking if I'm short pound. I'm not. I was shorting Kiwi this morning on that spike. Got lucky in that I'm in 2 pips from the high, and the stop is like break even. So I'm just going to sit there and see what happens. But here we are with pound. Okay, and this is the sliding parallel. I don't know if the structure is going to remain intact or not, but we've got the volume level here. You would also have 2 equal legs from the low. In other words, if this is an ABC rally, don't know that it is, but if it is, you'd get 54.76 as a level of interest that could end up being resistance. So for pound, the situation is a little more urgent. When we look at the euro pound exchange rate, it makes me wonder if maybe the pound's actually not a little more bullish than I thought. But either way, hopefully we have an idea here over the next couple of days. Again, this is the really long-term chart, okay? And the red line, which has gotten, you know, more or less, not this top, but extends from the top back here in December of 2012. And then there's resistance here for this year, at each top this year. That's, you know, that could be in play again, you know, who knows? So long term, pound's probably bearish, but, you know, near term, we kind of have some answers or some questions that need answering. Look at Aussie. Okay, so Aussie's turned up from the really long-term sliding parallel. Don't think there's any really big resistance till the 75.30s, up near 75 region. We've pulled back over the last couple days here. rid of this thing. Pulled back over the last couple of days here and should be looking for entries on the long side at the high volume levels, in my opinion. And that's, you've got actually a 50% retracement of this move from the low here. Gets you 71.60, happens to be very much in line with 71.55 to 71.70 high volume levels. And of course, the most important thing is all the slope stuff that we've got going on here, right? So sliding parallel a little above, lower parallel a little lower, and you've got the median line that's from the really long-term structure, okay? And this hasn't been like all that precise, but you can see that you have had a bunch of trade around it. You know, that all that trade that we had earlier in the year in like February and March and April, I mean, all those lows were right around there. You know, if you take a slider and kind of put it across here, you get a better idea of it too. So, you know, we're kind of treating this from a really simplistic standpoint, that, you know, the market has made a higher high and a higher low. I mean, you know, not much more to say than that at this point. You know, and here we have pullback, okay, after the higher high and higher low. So looking for support within an uptrend. All right, and I think the best spot for it is going to be in the 71.50 region to 71.70 region, just because of all the stuff that's around there. Okay, so that's where we are with Aussie. Finally, dollar yen. Well, dollar yen, I'm just going to say this. What we've got here is long-term support from the blue line, which is the lower parallel, the long-term structure. It'd be possibly a buyer in there. But then we've also got on the daily pretty, you know, good-looking bearish structure that, you know, we've kind of been waiting for this thing to get up to the upper parallel, and it just won't do it. So, you know, the sliding parallel has been the resistance lately, and now the pound's turning down, or sorry, the yen's turning down. You know, this is a range. I really don't have anything to say about dollar yen at this point. I want to sell the red line and I want to buy the blue line. I mean, that's kind of it. You know, so what I wanted to show you on dollar yen was, check this out. This is crazy. Okay, so this is measuring range size. Okay, range size, the bottom, and it's actually not measuring high to low. It's measuring on a close basis. Okay, so I wanted to get like the 20-day high close, the 20-day low close, and subtract them, you know, get the difference, and that's to me the 20-day range. Okay, so recently that figure as of 2 days ago was 0.68%. That's really small. And, you know, I was like, this is crazy. This range is really small. So when's the last time that we got a range that tight? Okay, this is you're going to be dumbfounded. Got to go all the way back to 1987. All right. Now in 1987, market rolled over and it kept going down in a straight line. It was right here. This was a very different scenario. We were in the confines of a really long-term downtrend, and the market consolidated and went lower. All right. Similar back in the 70s. Once you start getting to the 70s, the data gets a little iffy though, but the idea remains the same. So is that if that's happening here, then we just are witnessing a breakout from a 20-day range. Okay, I'm not going to trade on this information. I just thought it was interesting to share. So when we look at dollar yen, and I'm like, I kind of want to short it on a little higher or up here. Look, maybe it continues to go sideways like this and wedges up into this thing at some point at the end of this month. It's a possibility, right? I don't know. Something to think about. But, in the very short term, like the rest of the week, if you're hell-bent on trading dollar yen, what I do is this is the high of last Friday right here, okay? 120.35. And what I would do is kind of draw this over here and former support within the range here is 119.60. I'd look at resistance at 1960, with be bearish against 20.35. Again, just something to think about. I think there's probably much better ways out there to use your trading capital, but if you're looking towards the lower parallel, which is below 117 at this point, I mean the reward to risk is there. All right. Now, when you're looking at dollar yen, obviously we need to look at the S&P 500 and the Nikkei, and this is one reason why I'm not all that jazzed on being short dollar yen right now is that with the S&P, I still think we could actually get another move up. Okay. Remember, this is the chart. We've been following this thing for a while, and this was a chart I think I published over the weekend. But to see the gray parallel over here, right? Former support turned resistance right at the high. Right, remember in the FOMC on 917, and we actually hit that today. Okay, so is support turned resistance turned support again. So is the low we saw today, are we going like straight up from here? Not saying that. I actually think that the next move higher is the one that you want to sell. I have this all the way over here. You can see it's like towards the end of October. That would be several weeks from now. So if that happens, that would be real hell. It'd be like the worst grind ever. The median line is a little lower, so you could sell off a little more here today. Point is in a very short term, picture here, you're actually in kind of buy the dip territory in the S&P 500. Okay, and the big volume level from the week of 8/24, that Friday's close is 1991.90. Okay. And today's low is 1993.20. So you got volume there, you got slope there, you got these former highs there. Okay, you can see here, right, this little high here. You do have bullish slope there. This is worth following, okay, because we did see action on the 50 line up here. You did see action on the median line, right? The median line here was actually support for a couple days, on the 6th and the 7th. So say we sell off a little bit more in the S&P, still be looking for support on this median line. Now, if we crack the median line, yeah, then, look lower, okay? Maybe even to the month open, which is 1912, okay? But as I'm speaking right now, this is still this is at a support, okay? And, we could still crawl higher into one more high. Okay, and then the big area to turn real bearish again on the S&P is the upper parallel up here. Okay, this line up here. So that could be over here, could be over here, it could be over here. Okay, I have it over here just because there's all this confluence and stuff. So how or if it gets there, I don't know. But this is where the level to like turn real bearish and buy bigger puts would be over here. All right. So that's the S&P 500. So, the thinking here is that, and I know it's really hard to be patient, and I get that, I'm human too, it's tough, but the big area to be bearish on dollar yen, and the S&P is once they get to resistance, right? And so S&P resistance is up here and dollar yen resistance is a little higher too, right? It's up here. So maybe we don't get it. I don't know. All right, I'm just point that out though. Other stock indices worthy of note, right? Here's the DAX. You've got, hold on, I'll check something out real quick. Kiwi leaking lower, it seems. Here's the DAX. You know, same thing. Resistance is higher, and you got to remember in this market, we've come from some really big, you know, big support on a long-term basis. Okay, so you know, a little more of a rally attempt is not all that would be not be all that surprising, I should say. And then of course the Nikkei. Here's the Nikkei. Longer term basis here. Did come into some support. I haven't done a whole lot of charting stuff with the Nikkei lately. Probably should. You know, for example, I don't even know what this would look like. Okay, so this might be something to be aware of in the Nikkei. Not as clean as the S&P. It's really the one I'm watching at this point. So those are the four, you know, dollar yen, again, not too clean at all, but euro dollar, big resistance up at or big spot, I should say, for a pullback within an uptrend at 14.65.75. Pound dollar, well, basically now, right? So it's kind of make or break here for the pound. And then Aussie coming, you know, easing in a little lower, it looks like, before it finds big support, like 100 pips lower. All right, so that's that. Europe and commodity, Europe versus commodity. So let's shift focus here and look at, you know, Euro versus Aussie, Kiwi CAD, pound versus Aussie Kiwi CAD. I'm actually going to start, before I look at that, we're going to look at Euro pound, because Euro pound has come into big resistance. Okay. Mark asking, is there any correlation? I mean, not that I'm aware of. I don't think so. Okay, so Euro pounds come into resistance. Again, do think that this might be, we might have put in one huge low and this is a big bottoming process, but even if it is a huge bottoming process, Euro pound is going to pull back here, maybe even all the way down to 70, 170, 72, okay, whatever. So big, you know, behavior change potentially in Euro pound. You know, it could form some big bottoming pattern that, you know, it takes the form of an inverse head and shoulders or something. You know, we'll see. So with that in mind, think like Euro a little weaker relative to the pound. Okay. Raj says, granddad pair so slow. It's really not, actually, if you think about it. You know, keep in mind that these are pound pips. Okay, so, you know, today's move, we opened at, you know, 74.60 and we're trading at 74 right now. So that's a 90 pip move, right? Yeah. I mean, it's slow as you want to make it, right? If you want to trade with a lot, you can trade with more leverage on this because it's so slow, as you say, but, you know, it's really not that, you know, you can get some juice on this thing, that's for sure. All right, so we look at that. I want to present pound Kiwi. We'll start there because we've been looking at it a lot lately. Pound Kiwi, all right. So here's the weekly chart, right? Here's the structure. Here's the slider. And just about at it, right? So weekly, we're actually right where we opened the week. This could turn out to be a pretty important week for pound Kiwi. Turn out to be an important week for Kiwi dollar in general. I'll get to that in a bit because it's interesting action today. But this thing's at support. Nothing, no other way to put it. This is support for pound Kiwi. Okay. Does it slip a little lower maybe and tag this 2630 region, which is the low from June, maybe? I don't even have it on there, do I? Here we go. Right there. It's right on it. So, I mean, this is support, okay? And the trade here has to be higher, all right? I don't mean like it has to go higher. I mean, the trade is. Like, you want to look to buy this, okay? So, pound Kiwi could be pretty solid on the upside. I have been fooling around with some bearish slopes. I'm not sure, if this is the right thing to look at right here. This might be the right thing to look at. I talked the other day about the trend line in euro, which obviously didn't hold, but the concept of drawing trend lines off of the high after the spike, right? Remember, the same thing holds for pitchforks. Okay, pitchforks really are. It is really a trend line method anyway. Okay, so it's the same thing, and some people do it with fibs too. Okay, it's kind of, you got plug and play. You got to figure out what works. But same thing here, right? So if I draw it from here, I mean, that's just stupid. That's not it's not going to work, right? I mean, the spike there throws it off so much, okay, that there's this thing just throws it off. Okay, so you can draw it from the close or maybe the high from the day later, from the next day. So that's what we've done here, and this might be the right thing to watch for, as far as eventual resistance comes in, because certainly possibility that we actually have, seen a broader trend change in the Europe versus commodity complex, or I should say the commodity complex in general, with pound with Kiwi, Aussie, and CAD and everything. Okay, so near term the trade up, okay, and then could start looking for resistance at higher levels. Just for fun, I do want to see where. Let's see where the comes in. Pound. So 236 is the month open on so that's it's up here. Ali says sell euro versus commodities. Well, right here, pound Kiwi, we're actually looking higher because we're at a big support. Okay, so that's what the thought process is here. Pound Kiwi on the upside. Pound Aussie, we'll go there next. Pound Aussie running a little bit ahead of pound Kiwi, as you can see. Long-term median line. And straight up. Okay. And Molly's asking what's new trend. Well, it depends what time frame you're looking at. I mean, I'm saying that pound Kiwi's at support, so you should buy it. Okay. There's not like a black or white answer here. Okay. I think that the really big picture has changed. Okay. And that the commodity currencies have bottomed. Okay, that's what I'm saying. So that's that's where I'm getting at. But here's something to look at too. This is the ultimate paper versus commodity currency pair, if you will. And this goes way back. Check out when Pound Aussie topped in 1998. It was the week of, it was kind of like the, aftershock of the Asia FX crisis. I think it was actually the ruble crisis. Tech crash, okay, right here. Global financial crisis this week here in October 6, 2008. China crash the week of August 24th, 2015. They actually make a channel. So Pound Aussie, which has come into this long-term support, is getting a bounce, but I actually think that this is a bounce that you might want to sell at some point. So we'll, keep an eye out for resistance up near. Don't have a slope to work with on this one actually, but 215.40 is the month open price, so you might want to pay attention to that. And obviously, as things occur, we'll be looking at them in the updates. All right, pound CAD, go there next. Same thing here. We actually came into a long-term median line and former resistance. Okay, and we've shot higher. With pound CAD, the setup's a little cleaner. You've actually had a head and shoulders top here, all right, and resistance is from the trend lines a little higher, although I'm not, all that sure how. Just make a channel. No, it does not. So you might actually be better off looking at something like this. And resistance at 203.09 might be the spot for pound CAD for a sell. And 203.09 is the weekly reversal level. Okay, remember, it's the reversal bar. So this is the weekly reversal bar. It's the close of that week. Actually, it's different on different platforms. Obviously, 203.40 here. Anywhere from 203.10 to 203.40. Okay, so might be the spot to look at for pound CAD. But again, we're thinking more bullish pound and bearish euro. So in that case, it's a good time to switch over to Euro CAD, right? Okay, here we go. And EuroCAD's actually kind of setting up for something on the bear side, maybe a little sooner, as in like now. So this is a long-term median line, okay? Resistance all these times before. Resistance, and these are spikes, of course, okay? And now we're at it again, right? So that's the weekly chart. To put up a daily chart, it's always nice to see former support become resistance. In this case, that wouldn't be until up here, but I'll be watching to see how, see how this market wants to act. If it, the next few days, if you turn down from here, being at resistance, this median line, then it might be worth taking a shot, on the short side as far as EuroCAD is concerned. Okay, so EuroCAD, some of the levels, month open, actually right there now. Talked about this, answered a question for Raj on Twitter the other day. He had asked about EuroCAD and where was, we had that short-term inverse head and shoulders we looked at last week. And, said that 148.80 to 149 was the spot I thought for a resistance point, and sure enough, we've got to this level and for 148.80, and we've just kind of stopped there. All right, so here you can see it. This is the short-term level. Here's the short-term slope as well on both sides, bearish and bullish. Sliding parallel here, sliding parallel here. Short-term bullish slope, but I don't expect this to last. So eventually we'll be looking to the downside on this EuroCAD thing. All right. You can see, get this drop, impulsive decline, three-wave rally, impulsive decline, might be finishing off A, B, 1, 2, 3, 4, 5. I don't know, one more high above this would probably be best served to turn this thing. So that's EuroCAD. So, it might just be best to go short Euro pound, huh? If we like pounds and don't like euros. All right, so we looked at those. Let's look at Euro Aussie and then Euro Kiwi. Yep, those are the three, or the two left. So Euro Aussie, we were waiting on 53.30 horizontal level, December 2014 high. Right idea, didn't get it. And it's gone just through the roof. Yesterday's move was pretty incredible. I'd look to be a seller on Euro Aussie up in the 59.20 area. Okay. But I wrote yesterday that if it drops down into here, into like 55, 50, 56 before it gets there, then you could look to buy that, right? So, reason being here is that you're still within a solid uptrend, slope here, and Euro Aussie is really one of the only ones that still is. The other ones have broken, their levels. So even though I think that this is a larger topping process, there's still plenty to trade within this thing. So, Euro Aussie could pull back into support before taking off on the upside for a final high. So who knows? Maybe there's 3 trades in here, right? Pull back into here, buy it, up into here, sell it, and then this is the big one that you position for a big reversal in. And that makes sense actually when you look at both of the legs of that cross, right? Because we've got euro dollar coming into resistance a little higher, but we've also got Aussie support like 100 pips lower. So that's one of the times when that fits. I don't like to do that a lot. I'd say like, well, if I got these two things, then, put them together and I got, I don't like doing that because one, you're not going to be, you throw you off, just does. So here's the same chart as short term. Okay, but you can see here, if we look at, we've got that 59, why don't I just do this, 60-minute. Okay, so this is the region up here that we kind of want to sell in, right? Up here, 59.20s, up there. 59.16 is the month open, and 59.24 is the 618 retracement. Okay, we got a pretty good looking guy right here on the short term to mess with. Okay, so if you can kind of get you can envision that you get a pullback into here. Okay, 55, 50 maybe, something like that. If that happens, then be looking for a dip and a rip. So, it would be a buyer down here at the mid 55s and a seller up here in the 59s, and then hold on for dear life. So that's Euro Aussie. Euro Aussie is actually one of the better looking pairs as far as price levels are concerned right now. That and pound Kiwi right now. So continue to publish stuff on that the next few days. Okay, so that's Euro Kiwi. That's the last one. as far as the commodity Europe deal is concerned. Okay, so Euro Kiwi. Euro Kiwi. I have it on this stuff? Yeah, I do. All right. Not all that enamored with Euro Kiwi, but if you are, then I'd be looking lower, probably towards this median line. Again, you can see it's been pretty important for several years. You know, we wouldn't have had it drawn at that point, but you know, you've had it. The slope of this is pretty good description of what's been happening, okay, and inflection points in Euro Kiwi. So this incidentally happens to intersect, you know, towards the end of the year probably, but it would come in down near the June low, or the 629 low, which was obviously a big pivot. So that's down at 160, 900 points lower. If we are in new downtrends in these Europe fee commodity pairs, you know, then when do you get on board? You know, this might be something to watch for Euro Kiwi. You know, I don't have a very good grasp on the short-term slope on Euro Kiwi, but you know, maybe 673. I mean, the best indication of Euro Kiwi resistance, to be quite honest, is probably going to be when you get some resistance in these other pairs, like we were talking about Euro Aussie, which is so very clean, right? So if you start to see resistance in Euro Aussie up at the 159.20 area, and at the same time you start to see Euro Kiwi up here in the 173s, you know, then that might give you an indication that it's time to load the boat, so to speak. Okay. All right. So those are the first three themes, and or four really, because we looked at Euro Pound. Now we're going to look at dollar MEX, dollar Rand, and dollar. Oh, those are the two good ones. Look at those. All right. Dollar Peso. Should probably look at dollar CAD too. All right. So here's what's the daily? You've seen that one. I'll show it again. Here's the weekly, kind of messy looking, but actually there's nothing to look at there. All right, so I'll concentrate on this one. Here's the daily. Behavior change would occur down here. So we're still at support in dollar or Mexican peso, okay? And for me, this is a setup that I'd be turning bearish if dollar peso traded up here near 1690. Okay, and if it did so, you know, over the next couple of trading days, like, you know, sometime next week probably. You have a possible double top here. Okay, but remember, double tops aren't double tops until they break the low. So at this point, you haven't broken the low yet. And if it did break the low, you'd have a target of 1543 or so. But again, if we have turned the corner, it's quite possible, given, you know, the two tops up here. That doesn't mean you sell here because you're at the bottom of the range. And again, that's just a bad way to trade. But sell resistance if you get it. I'm not saying you're going to get it. I don't know if you will. Either sell resistance if you get it, or if you get a breakdown, then you look to, you know, get in on the breakdown. So if you get a breakdown, you'd be looking for, you know, probably a return back into the median line. So, you know, that's the zoom and retest trade, right? So if you got a breakdown here, then you look for the trade here and then sell it, okay? I know the drawing looks real nice, but that's how you would treat dollar peso. Dollar South African Rand. This has been like the cleanest uptrend in the history of uptrends. And you can see that the old resistance is actually coming into play now as support. Okay. So, you know, it's probably over this trend because we had this huge reversal up here 2 weeks ago, but you're still at support here and you could still see some bounce. Just heads up on that. If you do have bearish trend here, same deal as the peso, would be looking at selling resistance, okay, or the breakdown, in which case it's below the median line, and then you get the zoom and retest trade, which again, if you're not familiar with what that is, it's when the market breaks below the median line. A lot of times when you get that, the median line, if it's the right structure, you get the break lower and the market comes back and tests the median line as resistance. Okay, so those are some things to watch out for over the next few days in the emerging market currencies. Subjectively speaking, I actually think that, you know, we might actually try to just kind of go into some sort of a consolidation for a couple of days. Reason I'm saying that is because of Kiwi, which is somewhat related, you know, to these, and that they're high yielders, even though Kiwi's nothing's really that high of a yielder anymore. But look, Kiwi ended up hitting, that's the daily chart, ended up hitting resistance on the weekly chart too. So with Kiwi at resistance on the weekly chart, you know, we got that low there's former support, and now you have resistance here for Kiwi. Then, you know, it's also, by the way, today's high is 67.87. You know, it's the 38.2 actually of the decline from the April high. Okay, so you've got a few things there. Obviously, when we look at the daily chart on Kiwi, you got the high back here on July 10th. Okay, so it's a good spot, you know, if anything else, to get some sort of a pullback consolidation, whatever. You'd still be looking for support, by the way, on this line, right? This is the chart that we published last night. The Kiwi chart. You can see that former resistance, I should say, even though it really never was resistance, but it still worked. The slope here for this, you know, the upper parallel, right? It ended up providing support here on the 8th, and then it was support again just yesterday after Wheeler came out and said something. He's the RBNZ guy and said something about rate cuts or whatever, and New Zealand dollar tanked and then, you know, ran into support and then ripped higher again. So we're now at resistance now. Okay, so would be looking for a bigger turn down here. Could still see support on this line. However, you know, if I'm going by like a strict Elliott wave interpretation, then you do actually have a 5-wave rally here. 1, 2, 3, 4, 5. So you'd be expecting some sort of a rollover anyway at this point. And kind of like Aussie, support's lower, but support in this case is a lot lower. So, you know, Ali here was asking about Aussie Kiwi, and, you know, that's interesting when we look at through the lens of Kiwi dollar, which has really been the mover, right? That's the one that's really been influencing here. You know, Kiwi dollars had one hell of a run, and Aussie Kiwi is actually coming into support itself. Okay, here we go. So here's a daily chart. Okay, you get the picture right there. So it's not precise, but we're in an area where you could end up seeing support. And when we look at it on a long-term basis, actually broken down through this support region, horizontal level here. It's just one of those where you're not sure to draw it off the spike or not. If you do, you have the 61.8 at 106.44, which is in line with this low. I like highs and lows better anyway. But I'd be watching for the median line here, which is lower, but it's like 100 pips lower, 106.20s or something, for potential support in Aussie Kiwi. Other than that, not a whole lot to point out as far as Aussie Kiwi is concerned. Okay. Dollar CAD, we should definitely look at that, considering we've been talking about it a lot lately. Do think, again, the large trend is down, okay, since breaking resistance, or sorry, breaking support, I should say, here. I guess that was last Friday, or was that last Friday? 2 Fridays ago. We were kind of went to bed last night. Dollar CAD was, got in that long yesterday, and it immediately shot up like 50 pips. And then today it's just kind of trickled lower all day, and it's, just kind of an annoying trade. So it feels heavy. The trade long here is definitely against the broader trend. The broader trend's down, in my opinion, at this point. I don't think there's support for a really good bounce, as mentioned, until in last night's post, until down here. The slope level is like 27.20 or something. But again, the best spot to start selling is probably above the 131. You got resistance up there from, we talked about 2 equal waves, but 3150 is also the weekly reversal level. So see what happens here the rest of the day, and if we get any juice on the other side. Obviously, when we're talking about CAD, we're talking about oil. Oil looking for support at 45.32.76. It looks like today's low is a little above that, 45.92. Picture remains the same, of course, in that we're looking to, was thinking that we got this huge move lower in crude oil. I mean, that's a pretty big move, right? $51 almost, down to $46. It's a 10% move, but dollar CAD only had really 1 day of upside there. So it might be that dollar CAD doesn't, that might have been the correction for dollar CAD for all I know. If crude oil is about to take off on the upside here, then dollar CAD might be headed lower now. Yeah, Bill asking about Euro Yen, sure thing. We'll look at Euro Yen real quick. So Euro Yen, it's a daily chart. It's a daily chart. Oh, here it is. I got it right here. All right. So with Euro Yen, it's a 4-hour chart. This should do. So if I rolled, if I go out here, okay, so I'm told gold's gone berserk. Everyone on here is screaming. All right, so heads up, gold's coming into a level here. This is actually the year open price, very close to here, 1187. You can see it if you look at the futures chart. Okay, 1187.50 right here is gold. Okay, so right there, a couple bucks away. Where am I? Oh yeah, euro yen. So euro yen, here's the 4-hour chart. The thing for me here is that probably not a great trade at this point. At least nothing to write home about, because you've got so many better things to trade. It's not like euro and yen are kind of moving in the same direction right now. They've gone back to kind of both being risk on, risk off, it seems, just over the last few days. So in any case, pure TA style, this sliding parallel is still support, in my opinion. It's really not that far below. It's like 135.80 at this point. It was 135.70 earlier in the week. So that'd be looking there. And the 130, a little below 138, I should say, is still probably going to be resistance. Can't think. So that's what we got for euro yen. This is the weekly chart, and this makes the case for why the area up around 138 is such a big, important spot for potential resistance, right? You've got basically a sliding parallel up there, okay? And this is a weekly chart. So you can see on the weekly and the daily, with being potential for, something to happen up near 138 for euro yen. Pound yen, glad you actually brought up euro yen, because it reminded me of pound yen. Pound yen is one of the more interesting markets right now as far as the slope's concerned. So yesterday I was tweeting out about daily reversal support at like 182.05, and you can see we actually slid below it, but now we've popped higher. So I'd watch pound yen in conjunction with pound dollar. So this move here on pound yen's taken us right back to the sliding parallel. You could end up seeing resistance at some point if we kind of rip higher up on this line somewhere. So it's nothing in the immediate future, at least I don't think so. But something to know, right? That if you start to get a move, then you might want to pay attention to pound yen. And oh, by the way, the 824 close, which is going to be a big move, a big thing in all markets, is not very far away. It's up there. Okay, so you could end up getting a move up into here, horizontal and slope levels, pound yen. Okay, so we've looked at, I think, pretty much everything here. Ali asking, which day is a big day? August 24th. August 24th was the day of the crash, right? Remember? That was the day that everything went nuts. So August 24th is important because, again, it's basically your biggest volume day across the board for like everything. So, the best way to actually explain this concept, I think I have before, but look, 824, here was that day in gold. Talked about gold, right? So gold's gone, higher here, but that was 824 that day here, right? It was 1155, call it. That day was resistance once it was reached. Oh, and by the way, daily reversal support came in on NFPs at 1107. Okay, and now we've broken to the upside. And oh, by the way, it was also support just yesterday, in fact. Okay, so that's an example of using, daily reversal support resistance levels or a big volume day, okay, as a point of reference. All right, so yeah, just I'd kind of go across if I were you and just kind of mark those levels 824 as the big spots in a number of markets. And for euro dollar, it's like up at 116 something. It's like 116.20. So for dollar yen, it's 118.41. Just know those levels. so that when your market gets there, you can just read and react. All right. Alrighty. All right. So that is pretty much what I wanted to cover. Pretty interesting to see this gold move, huh? And not a whole lot of action in, the currencies, to be quite honest. I mean, you got a gold move up like this just over the last, what, hour, couple hours? Let's see. Yeah, I mean, so it's really the move here, it's an hour ago. The last hour, and guess what? We came into the year open at 1187. And, you'd expect Aussie probably and Kiwi. Kiwi at times is more correlated to gold. You'd probably expect those things to really go through the roof during normal times, right? Normal times. I don't know what's normal anymore, but they're not. Dollar yen is actually coming off a little bit, but it's dollar yen, so it's coming off like 10 pips, but we'll see. So, all right, that's it for now. We're going to pay attention very closely to the S&P 500 over the next few days. Don't forget, we have, the behavior change that we got on this move up here. It's important to pay attention to this stuff because it's easy to get emotional about a market. I get it, right? It's really hard to stay kind of even keeled, and you get fear, you get scared about missing out on something or whatever. Look, pay attention to this line because it was support so many times. It was resistance right after the Fed, in which we just went tanking, and then we hit it again today. So from here down to a little lower, like 1988 is today. Whatever that area, big area. Okay, as long as you're holding above there, you could still get another push higher in the S&P 500. And then once everyone really gives up on the short side, that's when you want to get real bearish. Okay, just kind of throwing it out there. There's a thought. If we start breaking down below here, then sure, look to turn bearish right away. Okay, but I'd respect this area, so right now as support. I mean, we are holding it. Okay, we're sitting here. We've had, it seems like the world's falling apart when you watch some news or read some other commentators, but just take it easy. All right. Ali saying dollar Swiss down. So what's going on, dollar Swiss? Yep, dollar Swiss down. Okay, dollar Swiss broke. Get a 200-day average here too. Got slope support down here, 93.80s. Would watch that again. Big triangle. Getting close in euro actually to the 1460-70s region. Okay. Alrighty. Okay. All right, guys. Take care. Have an awesome rest of your week, and I'll have this up for the good old archive later today. All right. All right. Take care.